Yes, the price of oil has dropped significantly again over the past 2 weeks, but compared to last year's level, it is still well above the standard. Usually, that's always an indicator of crisis situations. Nicola, as a market analyst with your many years of experience in the gold sector, why are we not seeing such strong fluctuations or massive drops in gold at the moment, despite these crises, for example? Hmm?
That's a very good question at this point. Thank you very much for that. Whether the gold price rises or falls doesn't depend on whether the oil price rises or falls. You really have to always consider the overall picture here. Yes. Exactly during that phase, we also had a very strong dollar, yes. And that means when we have a strong dollar, the big investors look at where should I move my capital to get even higher returns, right? And in this case, liquidity is withdrawn from one market. In this case, that can be the gold market, yes. Liquidity is taken out and put into other markets, yes. That can then lead to short-term setbacks accordingly. But I do say short-term, yes. You have to look at the whole thing in the long term, and in the long term, we have an energy crisis, yes. Everyone feels that, or I should say the general public feels it at the gas stations, when traveling, etc. So prices are very high. That means if we have an energy crisis or a crisis in general, it also drives up inflation, puts a strain on the economy. And in the long term, if we have a crisis, that means rising gold prices, yes. So in the short term, of course, this can trigger some reactions, yes. But in the long term, there is the crisis, and rising prices, rising gold prices go hand in hand with that. And we've already seen this in the past, and it will continue to be the case in the future.
In recent weeks, the US dollar has become significantly stronger again. Now, as we know, the US dollar is kind of the counterpart to gold worldwide. But what does it mean for the gold price when there is a strong US dollar in the market?
The US dollar naturally influences the gold price because the gold price is also traded globally in US dollars. And a strong US dollar, as you mentioned, of course, has an effect on the gold price in that the gold price drops a bit again. Yes, that means it corrects. But you have to consider the overall picture. The US dollar itself, the USA has a debt burden of $39 trillion, and that in turn has a very negative effect on the US dollar because this burden will have to be paid off at some point, and that's not so easy when you look at the total amount. That means this doesn't just affect the US dollar, but also other currencies. Other currencies have also come under significant pressure, especially because money can simply be printed without limit. And this, of course, puts a strain on the purchasing power of the currency, yes. And in this case, that's again in favor of the gold price, yes. That means the gold price benefits from a weak dollar, yes. And accordingly, unlimited money printing drives inflation up again, which means that the gold price will rise again in the long term, yes. Here you have to keep in mind that gold is limited, yes, unlike currencies on the other hand, which can simply be printed without limit. And that is, of course, the big advantage of gold because it is limited and cannot be printed infinitely. And accordingly, the gold price will also rise in the future because currencies will continue to come under pressure regardless of whether a currency gains strength in the short term or not.
Yes, as we now know, in recent weeks, the market has expected that there would be interest rate cuts again, but those did not happen. Now expectations were high. These expectations were not met. What does this specifically mean for the gold price this week?
So interest rate cuts in general are very closely linked to the gold price because with interest rate cuts, the dollar also loses strength, which overall means that the gold price gains, yes, and gains strength and the gold price rises. In this case, it was communicated in the media that there will be no further interest rate cuts. But I would say that you have to take into account that in May there will be a very interesting event, a change at the Fed, yes. Fed Chairman Powell will be replaced by a new Fed chairman because his term is coming to an end, yes. And who appointed this Fed chairman? Donald Trump. And we know Donald Trump is a big fan of interest rate cuts, yes. And accordingly, he also said there will be no new Fed chairman who is in favor of raising interest rates. Yes. And so now it remains interesting to see how things will develop. It's likely that there will be further interest rate cuts that will weaken the dollar again, and the price of gold will continue to rise. Yes. That also needs to be taken into account, this scenario in May. And once again, that's a big advantage for the gold price.
Last weekend, there were elections in Hungary. Now, of course, it's still not entirely clear. The positions of the respective parties were already clear, but how this will affect Eastern Europe remains to be seen. Do you think there are also risks here of capital shifts, especially in Eastern Europe? Or rather, how will the gold price react to that? Is it possible that it could pick up momentum again and also gain in value?
Yes. Yes, so elections always have an impact on various markets, including the gold price. But here, the main point isn't who wins the election, but rather where the election is actually taking place, right? If you take Hungary as an example, Hungary is a very aggressive gold strategist, you have to say. If you look at the numbers here from 2018 until, well, in 2018, Hungary still had about 3 tons of gold. By now, it's already over 110 tons. So Hungary is pursuing a very strong gold strategy here, and they will continue with this gold strategy regardless of any election, yes. But basically, yes, an election can always lead to short-term capital shifts. There can always be capital shifts due to an election. But in this respect, it always depends how is this country positioned. And in this case, Hungary is a very, very strong gold player, and that will continue to be the case. And accordingly, this will also have a strong influence on the gold price because Hungary as well, the Hungarian central bank, is right at the forefront, just like many other central banks that place great value on gold, since it has now become a strategic hedge against crises and sanctions and so on.
As we may also know, gold, or rather its role, has changed significantly in recent years. In the past, it was basically a crisis asset. Nowadays, it is also a strategic hedge. What is your assessment of this? How do you perceive the market in this regard?
Exactly the same. The role of gold has changed a great deal. So we see it in society. It has become much more important, yes. So private customers regularly buy gold, and that's very important. That means it's not just the central banks, but private customers are also buying a lot of gold as a means of protecting their assets. That's very important because you can see here as well, inflation continues to be fueled by unlimited cash. And in this respect, the role of gold has changed significantly because it has become more important in society.
Nicola, thank you for your expertise.